Hi guys, welcome back to TradFi and Bitcoin Club. So, as you all know, in the last session, we discussed about the first part of the rise of Bitcoin stocks and bonds, wherein we discussed like why Bitcoin stocks and bonds, what is capital mandate, and what are different types of pools which these treasuries are tapping in, and like how what was the Lyn story buying MSTR, and how corporations have an ideal leverage, so how it is better for the people who want some leverage uh, in their portfolio to consider Bitcoin treasury companies rather than taking leverage and taking leverage by your own self in your account, and basically that will lead to you getting margin called. But if you take leverage via uh, Bitcoin treasuries, then margin call risk is way less than as compared to you taking leverage in your uh, trading account. So this is what we discussed in the last session, wherein uh, like capital with mandate, as we explained, as I explained you last time about there are capitals, different type of capitals like equities, credit. So how these treasury companies are making some instruments for different kinds of capital pools and attracting that capital into Bitcoin and giving them a Bitcoin exposure. And then we discussed corporations have ideal leverage, how corporations can take some ideal leverage, and we compared it with um, we as an individual taking personal leverage on the trading account, and how it's better to have leveraged positions via these Bitcoin treasuries and not by taking leverage yourself. And we also discussed this 2x levered long ETF and how it's bad. I mean, in the longer run, it performs way bad. Like it gives you um, it gives you some better returns in up times, but it also in because Bitcoin is volatile, this 2x leverage position is 2x more volatile, and volatility in the longer run performs even worse as compared to just going long one time, because of the volatile nature of Bitcoin. And these leverage products are structured for daily leverage, so they adjust their positions daily. So in the longer term, we discussed this chart. In the longer term, the leverage ETF performs worse even than just going simply long on Bitcoin. So yeah, now here comes the second part. Do corporations help or hurt Bitcoin's mission? So this is interesting. Like even personally for me also, and for you guys also, this part will be interesting because we might have an opinion like Bitcoin should be first available to all the individuals, and then these corporates can come in. But things doesn't really happen uh, this way as we think. Generally we make a statement, uh, Bitcoin is for everyone. So what, by reading this article, I thought is like Bitcoin is for anyone and not everyone. So this is the difference. Like when you say that Bitcoin is for everyone, the back in the back of the mind you think like Bitcoin should be adopted by everyone out there. But this is not how things work in like free free markets. So it would be very difficult for you personally or every Bitcoiner out there to explain explain Bitcoin to I mean, to intellectually less understanding person, like it would be or a person who has never went to school, or who is less literate than you. So it's difficult, and if you think like much part of the Indian population lives in villages, so it would be very difficult uh, going to parts of India and then explaining them what is blockchain, what is hardware wallet, what is software wallet. It's a hard journey. But when you think of the institutionals, so they are already literate. They know what's happening. It's pretty easy when you compare it to this, like if you are aware of the startup world, they compare this idea with India versus Bharat. So when they talk about India, they speak about especially the population which speaks English, and um, I mean and they have some uh, in the top 1% of or top 10% of the people. So many products which these basically the rising startups are, these products are basically built for the English speaking audience, and some basic level of literacy and income. So basically that part of our country is India, and the larger part Bharat. You might not have seen many startups who target Bharat, basically the people sitting in villages. So this is similar, like I find this similar with Bitcoin also, because it would be personally difficult, and how like, let's say, how would I be get compensated if I decide to like spread this Bitcoin into some villages around me. So how will I get compensated? So this is also a reason why corporations make sense, and this is inevitable. Like, we might think that this should happen, like individuals should get Bitcoin before these other rich guys, but as I said, Bitcoin is for anyone and not for everyone. So yeah, this is how things work in real life. So you have to accept the fact that corporations will adopt Bitcoin. So this is what Lyn is also trying to give a message in this article. So let's start. Do corporations help or hurt Bitcoin's mission? Now that we know why they exist and the niche they fill for investors, the next question is to ask is, are corporations good for Bitcoin network as a whole? Does their mere existence damage the value of Bitcoin as freedom money? To have a view on whether corporations are good or bad for Bitcoin, one must have some sort of pathway in mind for how a decentralized money theoretically catch on. If it were to do so, what steps would have to happen, and in roughly what order? So this section will consist of two steps. The first will be an economic analysis of what it takes for a new form of money to catch on. That is analysis of what a path towards success would even look like. The second will be an analysis of whether corporations add or detract from that path. So step one, what would success look like? So what would it seem like if it did seem like a global digital sound open source programmable money was monetizing from absolute zero? Ludwig Wittgenstein once asked a friend, "Tell me, why do people say it is way more natural to think that sun rotates around the earth than the earth is rotating?" The friend said, "Well, obviously because it just seems like sun is going around the earth." Wittgenstein replied, "Well, what would it seem like if It did seem like the earth were rotating. As Bitcoin begins its quadrennial bull run, we must brace ourselves for the wider world's sudden and ill-informed interest. A great many newcomers will arrive with an open mind, as we all did once. But so too will many representatives of the incumbents to this disruption emerge from the woodwork to insist that what we can see with our very own eyes isn't actually happening because, according to their theory, it can't. Bitcoin can't be store of value because it has no intrinsic value. It can't be unit of account because it's too volatile. It can't be a medium of exchange because it's not widely used to price goods and services. These are three properties of money. Therefore, Bitcoin can't be money. But Bitcoin has no other basis for being valued. Therefore, it's valueless. QED. So I call this argument semantics, therefore reality. What could possibly falsify this? It is at root a claim about the material world, about what will or in this case won't happen in real life, and yet it looks rather like it relies entirely on the meanings of words. In discussion, dollarization in Ecuador, the instructive process of an official money being spontaneously replaced by simpler superior money. Larry White says, one of those who deny by definition that such a thing can even happen that they are only looking at the blackboard and not at what is happening outside the window. This is curious approach to understand novel phenomena that in general I would not recommend. Reality doesn't care how you describe it. Alan Farrington 2020 Wittgenstein Money. Bitcoin was launched in 2009. Throughout 2009-10, some enthusiasts mined it, collected it, tested it, speculated with it, or examined if they could contribute to it, improve it in some way. They liked the idea of it. In 2010, Satoshi himself described on the Bitcoin Talk forum how the network might initially bootstrap some tiny initial value. As a thought experiment, imagine there was a base metal as scarce gold but with following properties: boring gray color, not good conductor of electricity, not particularly strong but not ductile or easily malleable either, not useful for any practical or ornamental purpose, and one special magical property: can be transported over communication channel. If it somehow acquired any value at all for whatever reason, then anyone wanting to transfer wealth over long distance could buy some, transmit it, and have the recipient sell it. Satoshi Nakamoto. A year later, 2001, Vencescar Casares famously used it for exactly that purpose. This is an excerpt from episode 56 of Masters of Scale. Veneces Casares, we drive a bus from Buenos Aires around the world a week a year. We have lot of fun. It's just the guys get together and drink mate and make many miles. Reid Hoffman. That's Venice Cares, serial startup founder from Argentina, and he's talking us with him on a yearly journey with a group of lifelong friends. I want you to imagine this beloved bus. It looks like the product of a school bus that got freaky with an RV and then spent its retirement in the apocalyptic world of Mad Max. In the run up to one of their epic trips, Venice got word that the bus had broken down. The repairs weren't difficult, but paying for them was, especially as Venice was living in California at the time while the bus was in Argentina. Casares, we had to send money for fixing some things in the bus, and Argentina had shut down Western Union, PayPal, everything. You could send money to the central bank, but it was cumbersome and expensive. Hoffman, it looked like their next trip would be stalled until the Argentinian financial system was sorted out. But that could be months, even years. Then a friend made a suggestion. Casares, have you looked into Bitcoin? Hoffman, Bitcoin, this was 2011, just 2 years after the cyber currency had launched, and Venice was caught off guard. Casares. And I am supposed to be a tech guy, I am supposed to be a finance guy, and I had not heard about these things. I go, what is that? And he says, oh well, it's a new currency that you can send money anywhere without third parties. I was super skeptical and cynical. Hoffman, but that bus wasn't fixing itself, and neither was the Argentinian financial system anytime soon. So Venice decided to give Bitcoin a go. It was the start of mysterious journey. Casares. I found on Craigslist an older man who was willing to sell me $2,000 worth of Bitcoin, told me to meet at the cafe in Palo Alto. We met a guy who looked like Gandalf and I gave him $2,000 in cash. Hoffman. Vences didn't exactly trust what Gandalf did next. Casares. He made me download some app and read some QR code. He sent me supposedly $2,000 worth of Bitcoin. I walked back to the office convinced I got scammed. And then I sent my friend $200. That was my share of what I had to send. By the end of the day, my friend said, hey Venice, I got Bitcoin and I sold them for pesos. We are good. I am like, what? What just happened? Hoffman, Venice's view of Bitcoin was flipped. Casares. And I went in a rabbit hole it lasted 6 months where I was super cynical. But in 6 months, I said, I want to dedicate the rest of my career to help this succeed. Because I think a world in which Bitcoin succeed for billions of people is more important than one in which internet succeeds. Soon after, Casares got convinced a lot of big investors to buy Bitcoin. His Wikipedia page currently describes it as follows. Widely known as Patient Zero, Quartz reported that Casares was the entrepreneur to convince Bill Gates, Reid Hoffman, Chamath Palihapitiya, Bill Miller, Mike Novogratz, Pete Bette and other tech veterans in Silicon Valley and Wall Street to invest in Bitcoin. There are a lot more than that. I personally know several people who were active in institutional finance that bought Bitcoin early, directly in response to Casares explaining the value of it to them from talks he gave on the subject. After some initial success, the challenge for Bitcoin from there was that the network spawned a million competitors. Countless altcoins arose with similar capabilities, mainly that you could buy it, transfer it, and the recipient could sell it. And stablecoins introduced in 2014 let you do that with dollar collateralized tokens rather than free floating units, which helps strip out the volatility. In fact, the rise of competitors was the biggest reason why I didn't buy Bitcoin at that time in the early 2010s. It wasn't that I was against the concept, quite contrary, but I viewed the industry as filled with speculative froth and able to be copied into oblivion. In other words, there might be infinite supply of Bitcoin, but the idea is there might be finite supply of Bitcoin, but the idea is infinite. But then in the later 2010s, I noticed something. Bitcoin's network effect was succeeding as portable capital. It was breaking through that ceiling, much like a common communication protocol, whether a spoken language, a written script, or a digital standard. Money as a concept greatly benefits from network effects. The more people that use it, the better it is for others to use as well, which is self reinforcing. And that's where wanting to hold it really matters. That's where the effect has to grow to reach past this niche and crowded stage. We can categorize two types of money in this context. The first type is situational money, which refers to money that can solve a specific problem but that otherwise isn't of wide interest. An asset you can buy with your local money transfer across points of high friction, capital controls, payment deplatforming, etc., and have the recipient self-less exchange it for their local currency. Is a situational money. It has value, but being successful on that front does not necessarily lead to wider success. The second type of money is ubiquitous money, which refers to money that within a given region or industry is widely accepted as a matter of course. And importantly, the recipient doesn't sell/exchange it as soon as they get it. They hold it as a cash balance and then potentially respend it anywhere. In order for something to be used as ubiquitous money, the spender has to already have it, and the recipient has to want to hold it. Notably, people usually want to receive more of what they already have. After all, if a potential recipient wanted to hold it, they likely would have already bought some. If a new type of ubiquitous money were to arise, the majority of people would like first encounter it as an investment, acquire some because they view it as likely to appreciate in purchasing power, and then be willing to receive more of it as a payment as well. At that point, they don't need to be convinced to accept it as a payment. They already like the asset, so whether they are buying more of it or people are directly giving it to them as means of payment are nearly the same thing. Bitcoin's simple and secure design, proof of work, fixed supply, limited script complexity, modest node requirements, and a founder that disappeared, leaving decentralization and early mover advantage, bootstrapping a network effect, gave it best liquidity and perception of soundness. And thus, many people began wanting to buy it and hold it. And so far, that's where Bitcoin has had a ton of success as a sound and portable store of value that gives the user the option to spend it or exchange it. A sound, liquid, fungible, portable store of value sits in intermediate zone between situational money and ubiquitous money. Unlike situational money, it's increasingly perceived by people as a good thing to hold for longer run rather than just sell/exchange immediately if you receive. But unlike ubiquitous money in most areas, it's not yet widely accepted because the number of people who have taken time to analyze it are still a small minority. It's necessary to step to bridge between those two types, and I would argue it's a very long process to go through. The reason it takes long time to go through that stage is due to volatility and due to sheer size of the existing network effect. It is up against that people have their expenses and liabilities denominated in. If new monetary network with its own unit that is not pegged to an existing currency as a credit trail on top of it, but rather a fully parallel system to central banks, is going to bootstrap from zero to massive. It requires upward volatility, and any appreciating asset with upward volatility will attract speculators and leverage, which inevitably leads to periods of downward volatility. In other words, it looks like this. So here Lyn has given this chart where this is a log chart of Bitcoin's price starting from the start. So as you can see, in the earlier days, Bitcoin's price was like highly volatile as compared it as now. So you can see like in the earlier days the fall was nearly 85 to 90%, then it dropped to 85, then it dropped to 80, then so as we are progressing through the time and as Bitcoin is becoming a mature asset, the volatility part is diminishing. So till here, if anyone has doubt or any points to add, feel free to add on. Does anyone?
Uh, Just
Yeah.
a small point there, and my point was broadly that it's Bitcoiners like who are probably thinking from the first principle, or who are trying to convince maxis that it's not a bad place to go. Like people who are not Bitcoiner, like they will be jumping on it without such deep and rational thoughts to it. So yeah, just a comment there.
Yeah.
So, can you hear me? Ivan?
Finning, your voice is too low.
Not very good. Is that better now?
Uh,
Still pretty low.
yeah.
Okay, it's out. Okay, so maybe I'll speak a little louder. Is that better? Is it
Yeah,
just
yeah.
soft or is it
Now it's better.
not clear? Breaking.
No, it's not breaking, but yeah, now it's clear. Now you can go.
Okay, so the another reason why the volatility is as the class grows bigger is like now since it's now close to $3 trillion, right? To move it up by 10%, you're gonna a fresh capital of 300 billion, right? But when early stages when the market cap of that whole asset is not very high, uh, you know even a small amount of money coming in can potentially move the asset higher, or some amount leaving can move the asset lower. So over time, it's only, I think, if Bitcoin continues to grow in value, I think one should expect its volatility to reduce.
Yeah. So Pollock has a clarification in the chat. Clarification: Bitcoin itself is not volatile at all. It's the fiat system that denominates the value of Bitcoin in terms of USD, perceive it to be volatile. And hence, these fiat corporations cage Bitcoin in fiat definitions for the normies or plebs. Is it good for Bitcoin? So, that is what I mean, we will explore further in this article. And yeah, I agree to the fact that Bitcoin itself is not volatile. Basically, any asset, if you think in that terms, for example, if you think dollar in dollar terms, it's not volatile. If you think gold in gold's term, it's not volatile. If you think Bitcoin in Bitcoin terms, it's not volatile. So volatility comes when you compare it with uh, some other asset or other currency. So yeah, this is what I want to add. So if anyone doesn't have a point, then we can continue further.
I don't know, maybe I can just add my views there.
Yeah.
Uh, I think Bitcoin still is volatile. Any asset which has fallen, which has had drawdowns like 80%, 90%, 75%. I think those are volatile assets. Uh, I mean, the reason for this volatility is I think is nascency. It's not old enough yet. It's not mature enough yet. It's only a 15-year-old asset. It's for probably being only a 15-year-old asset. It's not volatile enough. Or yeah, so I think it's probably not right to say Bitcoin's not volatile, right?
He's talking from the sense of Bitcoin. Let's say if you value Bitcoin in Bitcoin terms, and then it might not be volatile. But when you compare Bitcoin USD, then it appears to be volatile. So
Yeah, not just USD. If you compare it to a basket of
yeah,
currencies,
yeah,
then it will still be
yeah,
volatile. If you compare it
yeah,
to a lot of assets, it's still going to be volatile, right? It depends what you think is the base or a standard reference. Is the Earth
yeah,
rotating or is the Sun rotating? Right? It's back to the same thing.
yeah,
Oh, I have something to add. Probably, Bitcoin treasury companies, people don't look at the tax arbitrage that you actually get. There are jurisdictions that, like even India, we are 30%, Japan is 50%. So, these plays are very helpful with the capital gains and the tax arbitrage for a lot of new investors, who have never self-custodied Bitcoin. So it's a very plus for these guys to come in. Also, some speaker had said now we are at 3 trillion dollar market cap, so 10%, 300 million. Oh, I would say, that earlier used to be, it's not like if for 10% I need 300 million for the market cap to move. There's a lot of demand, supply, and scarcity that actually, triggers this. So probably like 1 billion inside would make a move of 10 billion in market cap, because of the supply and scarcity dynamics of Bitcoin. But now with these treasury companies coming in, what has actually happened is there's a lot of paper that is being sold, which is getting sold at a higher value, which is then buying Bitcoin. So hence, when we are seeing this massive demand in this paper selling that's coming in, it's really not moving the needle in Bitcoin prices because there's a lot of extra Bitcoin paper value that is being sold. That's a little thesis that I have, that currently we have broken out and we are at all-time high levels. But the amount of treasury companies and how they have stacked Bitcoins in the last 6, 8 months, if this was 5 years back or something, we would have already tripled in Bitcoin price. But we've probably moved 15% in Bitcoin price. So that was like an observation that I've had in the last few weeks with the Bitcoin price.
Jedi, can you explain that a bit if it is okay? I don't understand, like, why do you think it's happening because of paper Bitcoin, and not because the numbers itself are massive now, like it's $3 trillion. So a lot of money also is not able to move
Correct,
it
correct,
significantly.
correct, 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 correct. So the thesis earlier used to be that if it whatever when it was 1 trillion, whatever the value of Bitcoin earlier was, whatever $1 trillion, $1 billion, it was just reflected to self custody Bitcoins or Bitcoin on exchanges and stuff like that. From last year, we have got into it coming into the traditional finance world where we've got now ETFs. Though ETFs are still backing it one is to one, but that is still an issuance of paper. And now we have come into the world of treasury bitcoins, where people are just creating equity. So now, if you go into the world of fiat currency, it's like we are creating paper. Sovereigns can create fiat currency, which is paper, and buy Bitcoin. So when you go in the treasury world, a promoter is like the sovereign. He can keep issuing equity, as in paper, and if he can sell it at the right price, he can just buy this base asset. So this, I feel, is where like how in even in the gold market we always hear that physical gold is probably 100, but paper gold or contracts on gold is like 10,000 sold. So if everyone who has a paper contract of gold will go and redeem it, they will not actually have those many physical golds to redeem. So that is where I think Bitcoin is entering now. It's entering this world of paper Bitcoins or ETFs and equity wrapped with Bitcoin. So hence this volatility that we used to see earlier with Bitcoin will be little more subsided because now we have institutional movement coming in. So if you see the last three cycles, how we used to pop, this cycle we haven't really popped. We've still kept, it's like an institutional accumulation zone that's been going on for the last 6, 8 months. So, and all this is happening with traditional finance coming in with a lot of surplus paper that is being sold to buy Bitcoin, which earlier was never there. We
Got
used
it.
to straight up go and buy Bitcoin and keep it with self custody, whereas at one is to one value. So I
Got it.
think that
That's
is.
very interesting. Yeah, I did not think about in that sense because unlike gold, I thought like eventually these companies will disclose their addresses, uh, and people will stop buying stocks of companies which do not do that. But maybe that also does not help with the paper Bitcoin circulation, which is what stocks are. Yeah,
There are companies in the market also, like you might be aware of Meta Planet, so they have their addresses disclosed. So, do you really think like they are just only making an announcement that we bought this much amount of Bitcoin and in the backing they really don't have any? So,
No, I wouldn't say that. See, for Bitcoiners, we don't have to trust. We can verify. So, if you go with that logic, I do not need to believe what MetaPlanet is saying. But you have to understand when this is now it is moving. now we are passing from the world of it being only in Bitcoiners' hands, Bitcoin. Now it's going to the world where institutions have come in, family offices have come in, and it is an different players are coming in right now. So they are not going to have the same incentives, the same thought processes that we all had, 5 years, 8 years back and have built on Bitcoin. There's a different class of money that has entered Bitcoin in the last 2 years. And that is going to change the way Bitcoin behaves, even how we have seen it. Of course, it will be a great asset. But now imagine no one like now to be a whole coiner is like becoming a dream. And after some time it will become impossible, and that's the time when they will mass adopt Bitcoin to the retail community. Like all these institutions will then start selling it to us as a product. But this is according to me, this is what's really happening. So even in gold, when gold got accepted, no one believed that okay, I will issue paper and not have real gold behind backing it. But now that's how the world has moved on to, right? After 50, 100 years of people selling paper gold and people selling shares of gold and people buying it, have realized that, oh, I'm just holding a contract, but there is no physical gold for this contract. If all of us go to redeem, only five guys will get their gold because it is 10x leveraged and sold in paper currencies. So I hope Bitcoin doesn't go there and Bitcoin is more verifiable and all that. But there will always be bad actors. You know, there will always be some promoter like Mike. I don't think MicroStrategy discloses their wallets. You know,
No, not yet. Yeah.
Correct. The biggest guy. So the biggest player who's 10 times bigger than the second player does not let you know his wallets. So I would say that is already the institution talking, right? So
So MicroStrategy does not disclose their address, but there is this online intelligence firm called Arc, which has
correct,
identified that.
correct. So there will be always like so how even in institution of gold there are people or custodians or some guy who will verify it. So all these systems will get in place. But
Yeah, no, that's
who
why
knows? There can always be a bad actor.
that's where the transparency of the chain and verifiability of Bitcoin scores over gold, right? So what you did with gold,
10,000%.
yeah, might not be
Correct.
applicable in the Bitcoin world. Uh, you have these checks in place, or you have these chains which are open.
Vincent, your voice is still pretty like pretty low. You can increase your volume.
Okay, maybe I'll talk out louder. Yeah, so yeah, I think that's where the Bitcoin superiority over gold in verifiability and transparency of the chain will help out, right? And make this make let it not become like gold, right? The paper market for Bitcoin not turn out to be over leveraged or over under collateralized. And
That's true.
So basically, we
what's
as
new is, yes, a lot of leveraged buying is coming in, right? That was probably not the case earlier. Now with this treasury companies, there is leveraged buying coming in. What is also changing is the new kind of buyers have new ways. It's not just exposure, right? It's also their ways of custodying that is different. ETFs don't need to custody it. This is a
I
new
think
breed.
what has also happened is the greed for fiat multiples has shifted this entire investor base, which used to go and buy Bitcoin, into Bitcoin treasury now. So, you, so a lot of people are going and buying Bitcoin treasury because it will double, it will triple very soon. Bitcoin might not, and that is basically fueling the demand for this paper Bitcoin. So you are going and getting these paper shares uh, in exchange of the money that could have gone into fueling Bitcoin price. Now it's not. Now it's going to, now only a portion of it is going to fuel Bitcoin price because the companies are trading at multiple of MNAVs. So for them, uh, only part of the money goes into sort of fueling that Bitcoin into Bitcoin. Earlier, like for example, $100,000 could have gone into Bitcoin. Now only if a company is trading at 5x multiple, only $20,000 is going into making that Bitcoin price change. That is one, and the second thing is you also see this play happening wherein every exchange every exchange, and if one is not, then it will happen pretty soon, is sort of building their own Bitcoin treasury. And the way they're going about it is because they have these customer funds, and because for whatever 1,000 Bitcoin, 2,000 Bitcoin, 10,000 Bitcoin that they hold, they get multiples of MNAV valuation. Everyone has an incentive to either back one or build their own. Uh, because the margins in running an exchange is very small, especially if you're just Bitcoin only. And if you don't do, and anyway, like shitcoin world is dead. So the new business model is you have an exchange, you spin a Bitcoin treasury firm, you fund a Bitcoin treasury firm, you get multiple of MNAVX. The investor base is also shifting there. So I think there's something to it. I can't exactly pinpoint, but there's something to it.
Yeah, I think this is a good point by you, Saurabh. Like, for example, strategy trades at 2 times MNAV and they raise 100 million. So, like, if these 100 million have gone directly into Bitcoin, then but right now also 100 million are going Bitcoin or not. I mean, the 100 million which they raise, they are essentially buying Bitcoin.
Yeah, they are. But the Bitcoin is effectively priced for them at 50K. If their MNAV is 2, it's effectively priced for them at 50K.
Oh,
Uh,
yeah, yeah.
So that is one argument. And the second argument is the business model for exchanges as well as the number go up investors. They are both also queuing up for MicroStrategy shares rather than for Bitcoin. So so that will probably in the short run drive MNAV even more up. Uh, I have not followed through that train of thought to see like what will be the effect of Bitcoin on that. But I see that probably in the short run, there will be a lot more demand for Bitcoin treasury companies unless we get into a bear phase and these companies sort of start getting bust. Maybe 2027 or yeah.
which is probably the best time to actually start a Bitcoin treasury company because you'll accumulate all cheap Bitcoins, you know. But yeah.
Yeah. So,
Everyone is front running the other person. Yeah.
yeah. So, Saurabh, on that point, like, MicroStrategy has raised 100 million, for example, and they are getting it for 50, like, for them, the price is 50,000. But essentially, they are buying uh, 2 Bitcoins. So, essentially, the money which is coming into Bitcoin, that is 100 million only. That is not going down. Or, like, am I wrong in
Yeah,
understanding?
that is true. That is true. The money is not going down. That is true. I will have to I'll still have to like look into it. But yeah, the money is
No,
not.
but this is on the thought that like how back in the day we would, if I put 100 rupees, that 100 rupees straight went into buying that 100 rupees worth of Bitcoin, you know. Now what is happening, to buy 100 rupees worth of Bitcoin, I'm paying 500 rupees. So it's not, I'm paying more for paper and buying less of the actual Bitcoin. Which if I had earlier, I had MNAV was 1:1, right? Because you're doing self custody. So basically, your velocity that you would give to Bitcoin price would be 100%, whereas here it's divided by the MNAV. Basically, hence the price of Bitcoin doesn't now get pushed so much because it's getting diluted in the MNAVs. That's a random thought I've been tripping on, you know, with this Bitcoin treasuries on basically paper dilution of Bitcoins.
Yeah, but there's also the incentive for the person who is buying these treasuries. Basically, he is hoping so there's a metric months to MNAV cover. So what this metric says is like, uh, for example, a Bitcoin treasury company is giving some 100% yield a month, then you will cover your MNAV. So this is how the investors are do it. Like, for example, miner. so when you invest in a Bitcoin miner, basically you could have bought all the Bitcoins directly on that specific date. But when you buy a miner, basically miner also takes a time to cover your first Bitcoin investment, and after that, everything which you mine through the miner, that is all profit. And in these treasury companies also, investors are seeing it like this, like if you bought at 2x mNAV and the company then buys in 2.5 times more Bitcoin, then essentially after a point, the price which you have bought, uh, that is less than 1 mNAV, and there will be a break even point in the journey, and after that, basically you would be also benefiting out of it. Like after that 1x mNAV breakout, uh, an investor would also benefit when company issue shares and buy Bitcoin.
That's correct. That's why you choose a treasury company over an ETF, because the treasury company is incentivized to increase your BTC per equity,
Yeah.
So equity per BTC, whatever that thing is. So whereas in equity, it will always be pegged to 1:1. But this is all saying that the promoter and the execution strategy works out. Of course, currently it is, but when everyone gets into it, there will be some players who are just not executing that well,
Yeah, yeah.
and your
That
base to cover will get haywire.
Yeah. Basically, when you are investing in treasuries, you are taking management risk. So that is one level above Bitcoin. So Bitcoin is
Yes.
a risk-free asset. So I was watching a podcast wherein the Jesse Ma, so he was talking to some guy. So he went to seller and asked, "You always say like buy Bitcoin and never sell it." So
Hmm.
he asked to seller like, "I am buying Bitcoin, but I would have much better off if I would have bought your shares." So seller replied to him like this.
Exactly.
So Sailor said, Bitcoin is the risk-free asset. So if an individual believes in risk-free world, then he should always buy Bitcoin. But in a portfolio, there is always a part where an investor can take some amount of risk. And for that some amount of risk, then you should think of these treasuries. So this is what I I learned from that argument that Sailor made.
And I think now they are categorizing Bitcoin yield as Bitcoin acceleration. I think the term is going to change, because the institution boys, when you say Bitcoin yield, they think yield on Bitcoin. They are not understanding it is the percentage of how many Bitcoins are held on the balance sheet increase. So I think that term is also from now. I saw
Yeah,
Adam Back
yeah,
probably
back.
talk about it.
Yeah,
So that it's called acceleration or accelerator or something like that instead of yield.
yeah, yeah. I saw his tweet. Bitcoin accretion, something similar like that.
Hmm, that's true.
Yeah. Okay.
Hey,
So
Amrit, while we're on this, do you happen to know the JetKings MNAV and how they are doing?
Yeah, it's six
It's eight.
times.
It's
Oh,
eight times,
eight.
Eight?
right? Yeah, it's 8 times.
They are 20. They have 23 bitcoins with them right now.
Oh, just 23. And
Yeah, they are
okay,
the problem is he's not executed like how it should be. He's taken a lot of time since disclosing in December to now, 6 months. He's probably added only 8 bitcoins.
okay. And he's
Yeah.
self-custodying
Oh,
and
sorry. It's
disclosed
just
this
it's 6.8
proof of.
only. Yeah, you're right. I heard 8 somewhere, so I was like, okay.
yeah,
And
basically for him, currently Indian market scenarios doesn't are not playing well for him, because in Indian market we don't have any ATM like thing, or even we don't have like regulations in place. So he was saying this point at the Jet King meetup. Uh, basically these are two things, like we don't have any ATM like structure in India. So we have to go forward with this MSW, which Metaplanet does, or basically moving strike warrants, and this issuance is also pretty difficult, which Metaplanet does in Japan. This is also difficult to do in India. So me and Saurabh were figuring this thing out, but we haven't find out a good way to do ATM like instrument in India. So this is the reason why like uh, I mean he's not able to execute it good when we compare with other companies. But yeah,
No, I think
Oh,
it's also too nascent here, and also the promoter needs to be fully well versed with all the other financial products that are available. Has so there is lots, and of course in India you don't want to be a risk taker because the regulators will come down hard on you, especially
yeah,
for something like crypto.
yeah,
But yes, I think he's apparently they bought two bitcoins this month or something like that was disclosed.
yeah,
okay. I think that's the reason then MNAV is staying so high. Had he done
No,
all
the
the
reason
ATMs?
actually they have an MNAV high is because they just have a 2% circuit lock, and right now it's hitting 2% circuit every day.
Right, right. I mean, since
And
past 1 month, that's what it's been doing, I believe. It's just hitting, and there's not much liquidity to even buy those
yeah,
shares.
correct. So unless you know a broker who's holding those shares, or you just keep relentlessly hitting the market, you're not going to get these shares. And even if you get, you're getting very small amounts. So that's why someone big is buying, and he is now doing, I think, he's trying to raise, right? He's looking around, talking to people.
Mm, mm,
So
mm.
hopefully by end of the month, he's raised something. Let's see. But
yeah.
have you all taken positions in JetKing or not really? Or it's been tough to take a position?
Tough to take a position. I've been intending to from last 1.5 month, but yeah, not been able to.
Means you put buy orders, but it's not getting
Yeah, it's not
fulfilled.
getting through, and I think even the market timings are different, so I just like gave up and just buying in Nasdaq.
Yeah,
By the way,
so
guys, this session is getting recorded, so I mean it's live on
Yeah.
X. So be sure,
So
like you are open to disclose your positions.
yeah, and also
Okay,
like we do have time beyond the session when we can chit chat, but these ones get recorded and streamed. So beyond 9, 5, 9, 10, we open it up for other discussion.
gotcha, gotcha.
So I think there's a lot to cover. Maybe I can cover this. Uh,
Yeah, let's cover as much as we can.
yeah, yeah. So let's focus. During its adoption phase, where it's going from worth nothing to worth the equivalent of trillions of dollars, it makes a rather flawed form of near-term money. If you receive some Bitcoin and want to use it to pay your rent at the end of the month and are pretty tight budget, on a pretty tight budget that is swimming in excess cash, neither you nor your landlord can deal with it potentially going down by 20% within the span of a month. The landlord has expenses in the existing network effect of fiat currency. She needs to reliably know what her value in rent from the tenant will be. And you as a renter need to make sure you can pay your rent at the end of the month with money that won't surprise you with rapid loss in value. The same is true for other costs of living in general. So basically, Apollo asked the question, Bitcoin itself is not volatile. But if you see this example, like currently, we are not on a Bitcoin standard. So if you go and buy a thing, or as this example, the landlord is asking for rent. So I mean, all the people around us are not Bitcoiners, and they won't accept Bitcoin, which goes basically they can't spend it for tangible things which they want to sustain life. And when we compare these tangible things which we have, like food, rent, clothing, which we need in our day to day life, they are currently volatile uh, with Bitcoin. So this is the reason why, and this is the case wherein Bitcoin is currently volatile. So yeah, this is the point which Lyn is trying to make, and which Fineng was also trying to make, and which also I agree to, because currently you can't give Bitcoin to a shop, in a shop, or yeah, when you buy groceries. You can't give I mean, the next person should accept it to exchange the value in terms of Bitcoin. So currently it's not the case. That is why we have to take into the account of volatility of Bitcoin with USD or INR. And so Bitcoin is treated mainly as an investment device. There are hardcore enthusiasts likely to spend it, to want to spend it. People with specific payment problems, capital control, payment deplatforming, and are more likely to want to spend it as well, although they increasingly have similarly liquid options like stable coins for that purpose. The fact that stable coins are centralized does not matter much if you are primarily using them for a few days, weeks, or months, like checking account. There are some very well meaning Bitcoin proponents trying to convince Bitcoin holders to spend it more. I don't particularly view that as a sustainable practice. Bitcoin is not going to catch on as a charity. In order for spending it to catch on persistently at scale, that is not just billions of dollar equivalents in an annual global medium of exchange volume, but trillions. It has to solve problems for spenders and slash or recipients that other solutions. And at this stage of adoption, that's not necessarily the case, especially with capital gains taxes applicable to every single transaction, like stable coins for near term spending needs where volatility needs to be low. The best advice I can give to these proponents is that while educating people is good, keep it up. It is important to manage expectations along the way and understand the economic path dependencies at play. This is where optionality is important, and it's a topic I observe widely misunderstood or underappreciated. Owning a sound, liquid, fungible, portable store value that is going through its adoption phase gives the owner some perks or options that the other assets do not. Mainly, they can bring their store of value wherever they want in the world without relying on central counterparties and credit. It also allows them to make cross border payments, including to deep platform recipients through substantial friction, even if they are staying put where they are. They might not be able to ubiquitously pay with it, but if need they can find ways to convert it into local currency in most environments that they find themselves in, and in some cases can indeed pay with it directly. When analyzed through this lens, Bitcoin is incredibly successful. See why. First, we have to understand how shockingly unsellable most monies are. Imagine you are going to go to a random country. What money or other portable liquid fungible bearer asset you bring with you to ensure that you have plenty of buying power without relying on global chain of credit. In other words, even if you all your credit card shut off, you how can you ensure that could, with some annoyance and friction, still be able to transact? The best answer currently is generally physical US dollars. If you bring US dollars with you, then although you may have trouble directly spending them with many types of merchants, it's pretty easy to find someone willing to convert dollars to local currency at a reasonable rate efficiently. The second, third, and fourth best answers are probably gold, silver coins, and euros. Once again, it's really not that hard to find countries willing to take gold, silver, or euros and give you fair local value in return. After that, it starts to fall off pretty rapidly. Chinese yuan, Japanese, and some other are in the top 10. This is where there tends to be more frictions for conversion. I would put Bitcoin in the top 10 at this point, somewhere in the 5 to 10 range, particularly if the place you are going to is any sort of cities will have plenty of options that you can seek out if need be. That's remarkable considering that it's only 16 years old. Below that, it's a long tail of 160 plus other fiat currencies. I have the examples of Egyptian pounds and Norwegian krone. Since I go to Egypt every year and Norway and tend to have a bit of their paper money around. They are terrible money outside of their own countries, as are the vast majority of currencies. This is the picture. So it's harder for me to spend Egyptian pounds in New Jersey than it to spend Bitcoin. Same for the currencies of 100 plus other. It's arguably already one of the world's top 10 monies in terms of international celebrity, sometimes in the 5 to 10 range, most likely. If you are not spending Bitcoin, are you using it as money? Yes. Money gives you liquid optionality. Holding it is using it. Bitcoin is not ubiquitous money at this time. And so instead, it serves those earlier parts of the path as money for enthusiasts, situational money, and slash or portable capital. So I agree with this point. Like, if you are not spending it, are you using it as money? Currently, I also like don't spend my Bitcoin because it's really hard to like keep a track of capital gains and all, and then buying and again self custodying is also like there are only few exchanges in India, and sometimes the their bank accounts gets freezed. Yeah, it's hard. So that is the reason why I am also not currently spending my Bitcoin. Most of you guys also in the room might not prefer to spend your Bitcoins currently. So I think we should stop here and continue the next part in the next session. And or should we cover these questionnaires? I
I
think
think this is good. We can maybe stop here. We can have one more session on this
yeah.
and open the discussion for people, like whatever
For
questions they might
the
have.
most part, I think there are only two questions. So and then the next part starts how corporations fit in. So should I do it
Yeah,
or
then let's go ahead. Whatever you feel like. You feel like finishing it off, finish it off.
I think we can take these three questions and then uh, come to end. So let me go through this. When will its usage take off as a medium? Likely not until it's order of magnitude larger and less volatile. Only a small percentage of people understand it and hold it as a value. A tiny percentage of global assets, ballpark of 0.2%. It can rise 100% plus in a year or fall by 50% during that same time. And since a ubiquitous money is one that you are happy to hold after you receive it rather than sell/slash exchange it, like a situational money store of values at scale tends to precede medium of exchange usage at scale. The medium of exchange market is very competitive. Stable coins that tie into existing fiat currencies are best positioned that at scale over the next several years. Where stablecoins fall short is when someone wants to hold them for more than a few months. They get debased and can be censored, confiscated by the issuer or by an authority that is influence over the issuer, whereas no central authority has that power over. Isn't Bitcoin too volatile to be money? Yes and no. Volatility is not inherent part of Bitcoin, like would be the case if its various qualities were erratic and frequently changing. Its qualities are quite persistent and sound. The volatile aspect is something that the rest of the world gives it as they explore it and adopt it. So this is where your point comes in, Apollo. So until and unless world explores this thing, they will treat it as uh, volatile asset. Since the network is bootstrapping from zero into a large ocean of capital, it needs and with sustained upward volatility comes periods of euphoria and leverage followed by painful pullbacks and deleveraging. That's why in this stage it's often treated as a long-term investment. Unlike other investments, it also gives the investors monetary abilities via liquidity, portability, and diversity. That is monetary type of asset. If it were to become far larger and more widely held, its volatility would diminish both to upside and downside. How can Bitcoin be its own asset if it's priced in dollars? Isn't it just a dollar derivative? Bitcoin is an asset that can be priced in. There's nothing in itself that refers dollars. It is often priced in other currencies on exchange and is here to. Dollars are the most liquid money in the world today. Smaller and less liquid assets are almost always priced larger or more liquid assets rather than the other way around. The larger and more liquid monetary network is what people use as their unit of account and have most of their liabilities denominated in. So that is the reference point. A long time ago, dollars were defined by a certain amount of gold. Eventually, the dollar became larger and more than, and the situation flipped. Now, gold is primarily priced in dollars. In the long arc of time, Bitcoin could flip the dollar in this way, but it's not anywhere near that. It doesn't matter what Bitcoin is priced in along the way, it's bearer asset that can be priced in larger, and if it one day becomes the largest and most liquid money, then other things routinely be priced in as matter of course. While people are free mentally price things whatever they want, it's unreasonably to expect most people to price things in Bitcoin anytime soon. And it doesn't make sense for critics to describe this as flaw of Bitcoin. There's no other path that centralized monetary assets bootstrap than to be routinely priced in existing currencies while it is fallen. So yeah. So Jatin, you can stop recording and yeah, the floor is open to chat.